Good afternoon, traders. Welcome to the afternoon market review. First, let's talk about the currency pairs. As tariff day nears, option volatility has surged, especially in the NAFTA currency tied to recession risk. Alongside tariff concerns, stabilizing US real yields and emerging market uncertainties have slowed the dollar's decline. While tariff may boost the dollar, potentially by 5% if increased by 10%, their impact depends on the scope, the timing, and the market preparedness. Despite some tariff fatigue, broad tariff or the 25% US Mexico-Canada levies could hit the US growth more than globally. Though, overall, tariffs remain dollar positive. Next, let's talk about the crude oil. WTI crude oil prices dipped as much as 0.9% on Tuesday, but later recovered, closing flat. The brief decline followed news of a possible Russian and Ukraine ceasefire and a preliminary agreement from Russia, which raised the hopes of ceased Western sanctions on the Russian oil. However, the market reaction was muted, reflecting skepticism over the deal's ability to significantly improve the global supply. And Russia's February crude exports hit a 5-month high, underscoring its strong energy revenue amid the conflicts. And meanwhile, Trump's proposal to impose a 25% tariff on the Venezuelan oil buyers helped limit the downside pressure of oil, as it could disrupt the supply chains for major importers like China, India, and parts of Europe. And in addition, the rising Brent crude call options and the easing global stock market volatility supported the oil prices, despite the WTI remaining over 10% below its January highs. And last, let's talk about the gold. Spot gold purchases by the central banks hit a record high in the Q1 2025, and driven by the growing distrust in the US dollar system and the rising demand from the Asian retail investors amid the currency fears. Gold ETFs and mining stocks also saw a strong inflows, signaling the increased safe haven positioning by the institutions. And the Fed's $77.6 billion loss in 2024, high interest cost, and signs of a weakening US economy, including mass layoffs and rising credit rejections, have shaken the confidence in policymakers. And as a result, gold's surge past $3,000 reflects both a hedge against the monetary instability and the deep global economic concerns. So that's all for today's afternoon review, and thank you for watching.